On behalf of the Department of Commerce, DG Vaishnav College and the Institute of Cost Accountants of India, I welcome you to the 9th day session on this crash course. I welcome our resource person, ACMA Saravanaprabhu, practicing chartered accountant and an expert in the taxation area. Before your arrival, I was interacting with the students on the progress of their classes. They have found it very useful. They are feeling empowered. So that is the feedback I received from the students in all the 8 days. So we have got another 8 days to go. So it is now the class is yours, sir. You can take over.
So just a second, I'll share my screen with you. So again, very good afternoon to all of you. In the last session, we were predominantly discussing something called as input tax credit. So we are almost finished, just a few more areas to be seen there. Before I start off with the session, I thought I'll ask you a few questions so that just like yesterday, during the middle, I asked you questions. So today I thought I'll start off with a question so that I can also understand how much you have really appreciated the session. Right now, yesterday's session, one small feedback from my end. I see the same set of people interacting. So I appreciate those who are interacting. I really appreciate them. They have really given really good answers yesterday. But today I want participation from everybody, not the same set of persons to be answering again. They can answer, no doubt. But I also want others to answer as well. So that being the case, so let me open up the chat. Let me ask you a few questions. Now, please tell me, my dear friends, as far as input tax credit is concerned, again, the very basic question, are we looking at input tax credit from the supplier's point of view or from the recipient's point of view? Please tell me the answer in chat. We have discussed this n number of times yesterday. Good, good. But I thought we will set this. Good. So please understand, my dear friends, as the name says, it is input tax credit. Therefore, it is input. Input means from the purchaser's point of view, which means from the recipient's point of view we are looking at. So please understand that very clearly. So having seen that one, we discussed yesterday in the second half of the session, we discussed ineligible and eligible credit. Now, in that, I will ask you a few questions, blocked credit and eligible credit. We discussed that one. Now, please tell me, my dear friends, in insurance, what insurance is blocked? Please tell me that in chat. As far as insurance expenditure is concerned, what insurance ITC I cannot avail? What ITC is blocked as far as insurance is concerned? Please remember yesterday and tell me. Life insurance, good. Health insurance, good. So good, my dear friends, I'm happy to see all your answers. Again, it really shows you have appreciated this. So life insurance and health insurance, they are blocked. So the ITC on that life insurance, health insurance is blocked. Now, what about ITC on group life insurance or group health insurance? Is it allowed or is it blocked? ITC on group life insurance or group health insurance? Allowed or blocked? ITC allowed or ITC blocked? Please tell me the answer in chat. Blocked, good. So therefore, please note, my dear friends, doesn't matter if the life insurance is an individual policy or a group policy, doesn't matter at all. It is completely, the ITC is completely blocked. Now coming to construction related expenditure. Now let's say I use some goods or service to construct my factory building. Is it allowed or is it blocked? The ITC, is it allowed or is it blocked on inputs used for constructing a factory building? Blocked, good. What about office building? I use some goods or service for constructing office building, blocked. So it doesn't matter whatever be it, because it is, what is the reason? Can you please tell me? We have seen, it is given section 17 subsection 5, okay, it is given. Section 17.5 only, these blocked credits are there, okay. But can you tell me the logic also? I told you to remember why these construction are blocked, immovable in nature, good. So Kritika, good answer. So please remember these are immovable in nature. Therefore, yeah, Shamraj, good. So therefore, it is blocked because it is immovable in nature. That is the logic. You can keep it in mind. Now, apart from that, we also saw certain other things which are blocked. What about passenger transport vehicles? Passenger transport vehicles, other than vessel or aircraft, normal passenger transport vehicle. Let's say the seating capacity is no. Let me complete the question. Let's say a seating capacity is 6. Imagine a passenger car like Innova, 6 plus 1, 7 plus 1 like that. So is it allowed or blocked? Blocked. What about tempo traveler, big tempo traveler? Tempo traveler, 13 plus. If it is 13 plus, then it is allowed. Good. So bus, definitely it is allowed. What about vessels, aircraft? What about vessels, aircraft? Ship, aircraft used as a passenger transport vehicle? Not allowed. Seating capacity is more than 13. Nah. As far as vessels and aircraft are concerned, seating capacity is more than 13. Definitely nah. Still it is blocked. Yeah, seating capacity doesn't matter as far as vessels and aircraft is concerned. Please note, my dear friends, the seating capacity rule does not apply. Vessels and aircraft used as a passenger transport vehicle, cruise liner, or flight, it is blocked. Now, for 3 categories of persons, this motor vehicle is allowed. For 3 businesses, this motor vehicle is allowed. Passenger transport vehicle is allowed as ITC. What are the 3 businesses? Please tell me the answer in chat. I want everybody to answer. Driving school. Second, I am a dealer in such motor vehicle like Kun Hyundai, whatever, Kun Honda, so on and so forth. Good dealer. Second one. Third, taxi, right? So I am in the business of transporting the passengers, like fast track, French track, like that. So I am in the business of transporting the passengers, Delhi cabs, Bureau cabs, so on and so forth. So in that business, I am there. It is allowed. Now, last question. Then we'll move on with today's discussion. What about this ITC on hotel or restaurant? Hotel or restaurant or outdoor catering? Allowed or blocked? ITC is allowed or ITC is blocked? Hotel or restaurant? Not allowed. But when it is allowed in certain circumstances. When this hotel or restaurant or catering for that matter, it is allowed in certain circumstances. When outdoor catering, that ITC is allowed in certain circumstances. When? Please remember yesterday's discussion. Anybody? Okay, so we have seen that there are 2 exceptions. Yeah, eligible if they are used for further supply of same category. Perfect answer, Balakritika. Good answer. Right, so therefore, if it is used for the same, making the same outward supply, that is, input is also same, output is also same. We saw that direct connection is there, direct expense. In that case, it is allowed. One more exception is there. Can you please tell me? One more case it is allowed. I wait for your answers. One more case. If you answer that, then good. You have understood yesterday's discussion. If it is mandatory as per law, for example, Factories Act says more than 200 employees, you should definitely provide catering. Should definitely provide food to your employees. So if it is mandatory as per law, then it is allowed. Fine. So therefore, this is the gist of discussion yesterday we had, my dear friends. Now, apart from that, there are a few more disallowances under section 17.5. Block the credits predominantly section 17 subsection 5. Okay, so please remember, certain section numbers are very important. This section 17 subsection 5 is very, very important. Right, so therefore you definitely need to remember that. Without that, you cannot say you know GST law. GST law, if you know, means one of the basic questions your employers or anybody will ask you in examination, etc. They will ask you what is 17.5. 17 subsection 5 is nothing but the block the credits we have been seeing so far. Now, apart from that, certain other goods or services are disallowed. For example, if certain goods are lost, they are lost or stolen or destroyed or damaged or written off, right, or given as gift or free sample. Right, so I'll repeat. If certain, remember the words, certain goods are lost or stolen or destroyed or damaged. Okay, lost, stolen, destroyed or damaged, one category. Second category, they are given as gift or free sample. I'm giving it as a gift or I'm giving it as a free sample. Then in that case also ITC is blocked, right? Therefore, this one additional point is there. Yesterday we did not have the time, we closed off. Therefore, please remember this as well. This ITC is also blocked. Right. Now, having seen that, now today ITC one discussion is pending. That alone we'll take it today, and then we'll move on to the next discussion. Now, please note, my dear friends, when should I take the credit? That is, what are the conditions which, if it is being satisfied, the ITC can be taken? What conditions to be satisfied so that the recipient can take the ITC? Now, please note, my dear friends, now, if these conditions are satisfied, then only the recipient can take the ITC. Are you with me? Now, as I told you in the beginning itself, in ITC, we are looking at from the recipient's point of view, not the supplier's point of view. Okay. Therefore, for the recipient to take the ITC, what are the conditions to be satisfied? Broadly, 4 conditions are given here. Plus, there is one more condition which we'll see later, right? So, therefore, this will ignore. Plus, there's one more condition. We'll see it in the subsequent slides. We'll see it, or I'll just write it out for you. Right. So 4 plus 1 conditions, broadly speaking, are there. If these conditions satisfied, then only the recipient can take the ITC. What are they? Now, have a look at it, my dear friends. First condition: the recipient should be in possession of invoice or debit note. He is receiving certain expenses now. Right. For example, he is paying the telephone expense. He is paying rent, whatever it is. Right. So whatever amount he is paying and availing ITC on that, he should have the invoice for that particular transaction, because in the invoice only the GST will be mentioned by the supplier. No? So if the supplier is issuing an invoice, proper invoice, and mentioning the GST on that, then only the recipient can take the ITC. Therefore, the first requirement is document must be there, the invoice or the debit note must be there. What is debit note, etc. Today, if time permits, we'll see it. It is the next discussion we are going to have it. Now, broadly today, what we are going to discuss is this ITC will finish off. Then we are going to discuss this. What is that? Value of supply, something called as valuation, and then something called as invoice, debit notes, credit notes only. Therefore, this debit note concept, I'll discuss it once I finish off valuation next year. Then I'll go to this invoice, debit notes, so on. Therefore, the recipient must be in possession of the document, invoice or debit note or other tax-paying document, as the case may be. What other document we'll see in this chapter? Don't worry. Right. So, other tax-paying document must be there. That's the first condition. Document must be there. But just document is there, it's not enough. You should have received the goods or service. That's very important. Whatever actual goods or service are there must be received. Please note, my dear friends, the word used is received, because we are looking at from the recipient's point of view. Okay, therefore, the goods or service should be received. So not only the document received, but also the goods or service must also be received. Okay. Third, the tax on such goods or service are deposited with the government by the supplier. That is, the supplier should deposit the tax. Please note, my dear friends, if the recipient should take the credit, the supplier should deposit the tax with the government. Therefore, whether the recipient is entitled to take ITC or not only we should see whether the recipient is satisfying the condition, the supplier should also satisfy one condition. What is that? The supplier should deposit the tax with the government. Then only the recipient can take credit now. Let's assume a particular transaction rent is 10,000 and the GST is 1,800 rupees. Right, so that 1,800 rupees is the supplier should have deposited to the government. Then only the recipient can claim it as ITC, that 1,800. Are you with me? Therefore, the supplier also should satisfy the condition of depositing the tax to the government. Then only the recipient can take the ITC. Therefore, very, very important, my dear friends. Note the words very carefully. Here, this condition, third one, should be satisfied by the supplier. Then fourth one, he has furnished the return. He means whom? He means the recipient. Okay, just to be very clear. Normally, he, as I told you, recipient's point of view only we are looking at it. Just to be very clear, he means nothing but the recipient. Okay. Therefore, please note, my dear friends, the recipient should also furnish the GST return. What GST return is there? Normally, we have a return called as GSTR 3B. Okay, I'm not sure whether the returns have been covered so far for you, but if not, the subsequent classes they will cover. So, one important return, this is the return, in fact, under GST law called as GSTR 3B. There are other type of returns, but normally GSTR 3B is the return. Okay. Therefore, the recipient has also furnished some, the GSTR 3B return also has been furnished. So, therefore, the recipient should start furnish the return as well to the government. Right now, please note, my dear friends, if you look at it very carefully, this first condition also satisfied by the recipient. Second condition also satisfied by the recipient. Fourth condition also satisfied by the recipient. Third condition should be satisfied by whom? By the supplier. Are you clear? Therefore, 4 conditions are there. 3 conditions to be satisfied by the recipient. 1 condition to be satisfied by the supplier. Then only the recipient can claim the ITC. Are you clear? Right. So therefore, these are the 4 conditions. Now, I'll do one thing. I'll give you 30 seconds time. Just go through the 4 conditions. Okay. I want you to by heart it now itself. Then I will ask you further questions based on this. So take some 30 seconds time. I'll put up the slide again. Please go through the slide and by heart the four very critical conditions. So please by heart them. I'll give you time. 30 seconds I'll give you. I will ask you questions. When I'm giving time, I will ask you questions. For example, I will ask you, what is the 4th condition? You have to tell me. What is 2nd condition? You have to tell me. Okay, so I will just tell the condition number. You have to tell me the condition. Okay, therefore, by heart this now itself. Why? I'll tell you. there are certain things that we have to discuss. I told you now 4 plus 1, fifth condition is there. For the fifth condition, first you should by heart the 4 conditions. Then only fifth condition you'll understand. So please go through. I want everybody to answer. Okay. Right. So I think it's enough time. Last 15 seconds. Okay, so I'll tell you the condition number. I want everybody to answer. I'll open the chat. Please tell me the answer, my dear friends. What is the fourth condition? Fourth condition. I want answers. What is the fourth condition? He has furnished the return. He means who? He means the recipient. Recipient should have furnished the GSTR 3B return. GSTR 3B return has to be furnished. He has to furnish it to the government. Okay. What is the second condition? What is the second condition? Second condition. I want everybody to answer. I again see the same set of people answering. That's good, but I want others to answer as well. Second condition, the goods or service should be received by the recipient. Good. What is the first condition? First condition. Recipient should receive the invoice or the tax paying document. First condition is the invoice or the tax paying document should be received by the recipient. Now, third condition should be satisfied by the supplier, correct? So, what is the third condition? Third condition. Supplier should satisfy this condition. What is that? Tax should be paid. Good. So, supplier should pay the tax to the government, then only the recipient can take the ITC. Good, good. Now, please note, my dear friends, now I will focus on the third point because the fifth point will be based on the third point only. Now, listen, third point says that the supplier should pay tax to the government, correct? Now, please note, my dear friends, now, let's take a transaction. Supplier is there, recipient is there, government is there. Okay. Now, this third point says that for the recipient to take the ITC, the supplier should furnish the tax to the government. Let's say a particular transaction is there, 10,000 rupees, and GST is 1,800. Okay. So this 1,800 GST, the supplier should furnish, pay the tax to the government. It is saying for the recipient to take the ITC. Okay. Now, this point says only the supplier should pay tax to the government. Does it mean that the recipient need not pay tax to the supplier? This 1,800 rupees, does it mean that the third condition only says supplier should pay? It does not say recipient should pay. Does it mean that the recipient need not pay tax to the supplier? Please tell me the answer in chat. What is your answer? What do you think? The recipient, without paying the tax, can he take the ITC? He has to pay. He has to pay. Please note, my dear friends, that is the fifth condition, right? We have seen, pardon. Just a second. So we have seen fifth condition, 4 plus 1, 5 conditions are there. Fifth condition like that I told now. So the fifth condition says, please note, my dear friends, the recipient should also pay tax to the supplier. He also has to pay, no doubt. But for this payment, 180 days time is given. Are you with me? Please note, the supplier should pay tax to the government. The supplier should pay within the time limit. What is the time limit? This GSTR 3B return I told now. The GSTR 3B return has to be filed by 20th of the next month. Okay, so within that time he has to pay. So supplier, there is no extra time. For example, August means September 20th. 20 days from the end of the month he has to pay. Are you clear? Therefore, supplier within the time limit for the GSTR 3B return, which is the 20th of the next month, he has to pay the tax. But what about the recipient to the supplier? He should also pay that, but for that some extra time limit is given 180 days. What is this 180 days time? Normally in business we call it as credit limit, correct? Credit time or credit period is so long, correct? So that credit period is deemed to be 6 months. So between the supplier and the recipient, the credit period is deemed to be 6 months, which is nothing but 180 days. But in examination, don't write 6 months. The law says 180 days, now you have to write 180 days only. That's a difference. Okay, therefore, it has to be paid within 180 days time, which is nothing but the deemed credit period. Sir, what if 180 days I'm not paying the tax to the supplier, sir? What will happen? Please note, my dear friends, if I'm not paying to the supplier, then whatever credit I have claimed, whatever benefit I have claimed, 1,800 rupees in this particular case, I have claimed the ITC, I have claimed the benefit. That I have to pay back to the government. I have to reverse the ITC and pay the tax. This 1,800, I have to pay it back to the government. Are you clear? Along with interest. Right? Therefore, 180 days time is there. If not paid within 180 days time, then whatever ITC availed, no, that has to be paid back to the government. It has to be reversed. The ITC has to be reversed. Right? Now, having seen that, now one more question. So this is the thing for recipient to pay tax to supplier. If the condition says that 180 days time limit is there. Now, my question is: we have taken this transaction. The value is, that is the invoice value. Bill value is 10,000, and we have said that the GST at 18% is 1,800. Therefore, total 11,800. Now, my question comes: the recipient should pay tax to supplier. You have said yes, within 180 days. You have said you have to pay. Okay, but now my question is: what he has to pay? A, should he pay this 10,000 alone? It's enough. Or B, should he pay this 1,800? That is GST alone. It's enough. Or C, he should pay 11,800 including tax. The entire value he has to pay. Or D, none of the above. Something else he has to pay, sir. What is your answer? Please tell me. So my question is: within 180 days time, what amount the recipient should pay to the supplier? What amount he should pay? 10,000 in our example, 10,000 or 1,800 or 11,800 or some other answer, none of the above, not our favorite option. So please tell me the answer in chat. What he should pay, what the recipient should pay within 180 days time? 11,800. Everybody is saying, anybody has different answer? Sir, I am taking 1,800 only credit now. I am taking the GST only as credit as ITC. Therefore, I pay only 1,800. It's enough, sir. Anybody has that answer? Answer is, please note, my dear friends. If you look at, this is all given in section 16. Okay, so these conditions, etc., they are given in section 16. Look at the wordings of section 16 very clearly. It says both the value and the tax. That is a word used. Okay, therefore, both the value 10,000 as well as tax, both have to be paid, which means what? 11,800 in our example. The including tax value has to be paid within 180 days time. So please keep all these things in mind. Right, so all these conditions are satisfied, then only the recipient can take the ITC. Right, so with this, the conditions are also over. So with this, I'll bring up close to ITC. Now, please note, my dear friends, this input tax credit itself, I can take even for my finance students, I take for around 15 hours, and for my inter students, I take for around 10 hours. Right, but today the objective is not that one. In whatever 2 hours time we have had, I have just tried to summarize everything and give you a nutshell. These are the basics. Without knowing these basics, you cannot proceed further. So the basics you have put very strong. Our foundation has been made very strong. So after that, you can build up the building, right? So you have books, you have my book also, which is there. Any other book also you can refer. So therefore, you can go through that one. Then you can build the building entirely. So with this overview of the input tax credit concept is over. The very basic core concepts are coming to an end. Now moving to the next area, which is part of our discussion syllabus. It is this particular thing called as valuation. Just a second. I'll share the relevant screen with you. Valuation. Just a second, my dear friends. Okay, so I hope you are able to see the next screen, which is there. Valuation of goods and service. Now, please note, my dear friends, as far as input tax credit is concerned, we have discussed section 16 onwards. Okay, whereas valuation is very simple. It is section 15. Section 15 read with the rules. Relevant rules are there. So section 16 and rule 27, 28, so on and so forth. We have up till rule number 35. Right, so rule 27 to 35, this is the entire scope of discussion as far as valuation is concerned. Now, what is valuation? I'll ask you a very basic question. Please tell me the answer. First, before seeing valuation, please tell me, my dear friends, please tell the answer in chat. You have seen various GST rates, correct? Now, can you broadly tell me what are the famous or the popular GST rates which are there? Please tell me the answer in chat. Please separate the rates by comma. What are the famous GST rates or the popular GST rates that you have heard in the earlier sessions or general knowledge? 5, 12, 18 and 28. Good. So 5, 12, 18 and 28 are the popular GST rates. Now, apart from that, there are a few transactions where 1.5% rate is there. Then 3% rate is there. 1.5 is there. 7.5 is there. even 0.1 is there, so on and so forth, right? Therefore, there are other rates as well. But broadly, predominantly speaking, 5, 12, 18 and 28. And one more thing you have left out, which is also very popular, nil rate is also there. No? Exempted category you have seen now. So nil rated or exempted category, that is also a popular rate. So therefore 0, 5, 12, 18 and 28, 5 popular GST rates are there for goods and services. Good. Now my question is, okay, let's assume GST rate is 5%, 12%, 18, 28. Now my question is, these rates have to be applied on some value, correct? This 5 or 12% or 18 or 28%, it has to be applied on some value, correct? What value will you apply? You please tell me the answer in chat. Okay, sir, GST is 5%, 12%, sir. Okay. That 5% or 12%, on what value will you apply? Please tell me the answer in chat. On the price of the goods or service. Okay, Shamraj. Any other answer? So, can I, Shamraj, can I tell that your answer is on the invoice value? Correct? Can I say that? Right? Therefore, whatever invoice value is there, which is nothing but the price paid or payable, that is what the law, we will see the word. A transaction value, we will see a word. What is transaction value? Nothing but the value of the transaction. What is value of the transaction? Nothing but the invoice value. Broadly speaking, there are some inclusions, exclusions, all that we have to see now. Are you clear? Therefore, please note, my dear friends, normally the value is the transaction value, which is nothing but the price paid or payable. Nothing but the invoice value. But we have to do some additions, we have to do some subtractions. What additions we have to do, what subtractions we have to do, that is the focus of this discussion in the valuation chapter. Now, please pay attention, my dear friends. Now, section 15.1, I'll give a broad overview. Section 15.1 says, value shall be equal to transaction value. Transaction value shall be nothing but, transaction value means nothing but the price paid or payable. Okay, so this is what section 15.1 says. Section 15 subsection 2 says what are the inclusions. As I said, what are the inclusions means additions. Then section 15 subsection 3 says what are the subtractions to be made. Then section 15 subsection 4 and 5, right? So they deal with, they say that in certain cases, value as per the rules, you have to find out. In certain cases, value as per the rules, we should find out all these things, right? Therefore, this is the very simple structure of section 15. Broadly, section 15 plus the rules only we'll be discussing. Okay, what does section 15 say in a nutshell? This is what it says. 15.1 says value is nothing but the transaction value, which is nothing but the price paid or payable. 15.2 says additions. 15.3 says subtractions. 15.4 says certain cases valuation has to be done as per the rules. Now, having seen that, now let's move forward. Second, all these not that relevant. I'll just come to the nutshell. As I said, I'll just give a nutshell today because I have to finish this and I have to go to invoice as well. So therefore, I'll focus on the most important areas. Now, having seen that, my dear friends, as I said, section 15 subsection 1 says that transaction value, the value shall be transaction value, value shall be nothing but the price paid or payable, paid now or in the past or payable in the future. But there are two conditions. If the value is taken as a price actually paid or payable, two conditions to be satisfied. Please note, my dear friends, both the conditions are to be satisfied. Condition 1 and condition 2. Both are to be satisfied. Then only we can take the actual price paid or payable. So what are the conditions? First, the supplier and recipient should not be related. Which means what? They should be unrelated parties. Okay, they should be unrelated parties. Right? Now, can anybody say unrelated parties transaction? In accounting terminology, we have a name. Can anybody tell me that one? Unrelated party transaction. Very, very famous everywhere in accounting terminology from now onwards, advanced level onwards. You will always see this term unrelated transactions, unrelated transactions, unrelated party transactions, related party transactions, and you will come across the word again and again. Can anybody tell me in chat, my dear friends, if a transaction is between unrelated parties, persons are not related, then in that case, there's a name for it. Can anybody tell me the name? I'll be very happy. Unrelated party transaction, there's a name for it. Anybody can say? I'll give you a hint. Okay, third party transaction. Okay, third party transaction is not accounting parlance. Okay, that's right. Unrelated party means third party only. Okay. But there's a technical name for it. I'll give you a hint. It has something to do with your body parts. That particular terminology will involve one of your body parts name, part of the body. Anybody? It is called as arm's length transaction. Correct? Have you heard of this term? Arm's length transaction? No? Maybe if not, at least you will come across this at a little bit more advanced stage. What is arm's length transaction means? Please note, my dear friends, I am putting my arm out. Right? Normally, if the parties are related, means we'll keep them very close. Correct? Related parties means normally they are closely related. Correct? We'll keep them very close. Whereas if the party is not related, he's a third party, as you have rightly said. If he's a third party who you do not know, then what will you do? You'll keep them very close, or you'll keep them at arm's length. What will you do? You'll keep them at arm's length. Is it right? Therefore, hence, transactions between unrelated party is also beautifully called as arm's length transaction, which means what? If you're keeping a person at arm's length, one arm's length, you're keeping them. It means you're keeping them at a distance. They are unrelated to you. You do not know who they are. So, such unrelated party transactions are also called as arm's length transaction. So, that is the first condition. Now, please note, therefore, the party should be unrelated. Why? Because, please note, if parties are related, to your related party, will you put the same as market price? No. Normally, relationship is there, means you will put normally a lower price, correct? Therefore, the first condition is the parties should not be related. If they are related, then you will take a lower value for the transaction. So, they should not be related. That's the first condition. Second one, price should be the sole consideration for the supply. What is meant by the word sole means it should be the only consideration. I'll explain. Now, please note, my dear friends, consideration can be of two types. One, pardon. Just a second. So consideration can be of two types, my dear friends. One, something called as a monetary transaction, other something called as a non-monetary transaction. Okay, so what is a monetary transaction means? For making the supply of goods or service, you are paying them money. Money means what? Either through cash or bank, you are paying them money, either cash or bank, you are paying them. Whereas non-monetary transaction, non-monetary consideration means what? Anybody can tell. There is a beautiful name for this as well. If for supplying goods or service, you receive a non-monetary consideration, what is that transaction called as? Anybody can say? That is, you are supplying something, and for that you are receiving not money, but you are receiving something else. In kind, you are receiving. We call it cash, in kind, and so on. So if you are receiving in kind, what is that transaction called as? Can anybody please tell? Compensation. No, compensation, not the right word. Any other answer? Let me put it this way. I am supplying certain goods. In return, I am not receiving money. In return, I am receiving one more goods or one more service. What is that called as? I am supplying goods. For that, I am receiving back as consideration. I am receiving back certain other goods. I am supplying product X. I am receiving product Y as consideration. What is that called as? I cannot tell. You have to tell. There's a name for it. Okay, let me give one more example. Barter, Kritika Basu, good barter. Barter or exchange, correct? Barter or exchange. Please note, my dear friends, this transaction covers, therefore, consideration can either be monetary or non-monetary. Non-monetary, it is normally called as barter or exchange, correct? Therefore, please note, my dear friends, as far as this section 15 is concerned, there should not be barter. Okay, barter or exchange transactions should not be there. Okay, there should be only, look at the word price. Price na this monetary transaction is what is called as price, my dear friends. Okay, there should only be price. There should not be any non-monetary consideration coming. That is, for you supplying goods or service, you should not get goods or service in return. You should get money. Okay, that is what is the meaning. Price should be the sole consideration, which means price or the money. Price means nothing but money. Okay, so that cash or bank, that money should be the only consideration. There should not be any non-monetary consideration. Are you clear? So two conditions are there. I'll repeat, my dear friends. The basic should be very, very strong. Okay, so two conditions are there. Then only we will take the transaction value, actual price paid or payable. Then only we can take that. What are the two conditions? One, arm's length transaction, unrelated parties. The buyer and seller should not be related. They should be unrelated parties. Second, monetary consideration, non-monetary consideration. Two types of consideration are there. Among the two types of consideration, there should only be monetary consideration. You should not have barter or exchange. That should not be there. Then in that case, you cannot take the actual price paid or payable. Are you clear? So two conditions are that both should be satisfied. Then only we can take the transaction value. Now, having said that, once both the conditions are satisfied, okay, then in that case, the transaction value shall be the price, sale price paid or payable, plus some inclusions, minus some exclusions. Now, in section 15, so this is section 15.1. Okay, now let's go to inclusion section 15.2. Let's come. Now, please note, my dear friends, in this slide, we are going to talk about the inclusion section 15, subsection 2. Now, there are 5 inclusions, A, B, C, D, clause A, B, C, D. Let's go one by one. Okay. Now, first inclusion is any tax, duty, or cess or fees, right? Levied under any statute, charged under any statute other than CGST, SGST, UGST, IGST, and compensation cess. So, other than this GST, other taxes, cesses, duties are included. Are you with me? So, what is the meaning of this clause? GST, CGST, SGST, UGST, IGST, or compensation cess, they should not be included. Okay. Whereas any other tax is there, that will be included. Are you clear, my dear friends? Now, what is the reason? Very simple. See, here we are finding out the value for levying GST. Now, for the GST itself should not be included in the value. Cyclical effect will come, correct? Therefore, that is the reason GST is excluded. Apart from GST, other tax and duties are there. What are other tax and duties? Please note there are some municipal taxes. We also sometimes call it as local body taxes. For example, Chennai municipality is there. The municipality will levy some taxes. That will be included in the value. Entertainment tax, if it is there, then it will be included in the value. Now, can anybody tell me the answer in chat? Entertainment tax. Have you seen this somewhere? Entertainment tax, one of the examples is other taxes included in the value. But can anybody tell me? Entertainment tax, have you seen it somewhere? Engyo Patrukon, sir. Engyo Pietrukon, sir. On what transaction entertainment tax will come? Can you please tell me? Okay, entertainment tax is state tax, okay? But on what transaction it will come? Income tax is, entertainment tax is not income tax. On what transaction will entertainment tax come? Not on SGST transaction, no. I am asking you on what supply will entertainment tax come? Good, Nirupama, you are good, absolutely right. Not on food, but on movies. Movies is correct. Right? Therefore, a good answer. Nirupama, your answer is Paka, which means you are really observing. As a commerce student, you are really observing the transactions are going around. Really, really good answer. Now, please note, my dear friends, everybody goes and watches a movie. But when you go and watch a movie, we are paying for somebody else's growth. That's a different thing. We have answered before. Where it's answered, I have not. Oh, Prithvi, Prakash. Okay, so he has answered. Good. So both, I think Shamraj is angry that I have not acknowledged it. Prithvi, Prakash. Good. Prithvi, Prakash also good answer. Movie tickets. So I missed to see that. Somehow it went up in chat. So both of you good answer. Prithvi, Prakash as well as Nirupama. So it is levied on movie tickets. So everybody goes and sees the movie, but none of us know on movie what all tax are levied. This entertainment tax is one such tax levied on the movie ticket which is there. Please observe it. Maybe sometimes they will not show it separately, but in certain theaters they show it separately. So much is the ticket amount, 85 rupees ticket amount, so much entertainment tax, so on, they will show it separately. So please observe, try to observe it next time. So if such entertainment tax is there, that will be included in the ticket price, that will be included in the price. On that value, including the entertainment tax only, GST will be levied. Are you clear? So therefore, the first transaction is taxes other than GST, like entertainment tax, municipal taxes, they will be included in the value for levying the GST. Now come to the next one. Any amount the supplier is liable to pay, but it has been, it's a long sentence, I'll just read the summary. Any amount supplier is liable to pay, but incurred by the recipient, right? And not included in the price. I'll give an example, sir. I'll give an example. Now pay attention, my dear friends, pay attention very carefully. Now let's assume one contract is there for construction or works contract. Some contract is there, let's assume works contract. The agreed price is 100 lakhs. This is the agreed price. Okay. Now, so you have agreed for 100 lakhs, okay. But later the client is coming and saying, sir, for this contract, certain goods are there. Some goods worth of 20 lakhs, it is there with me myself. I myself have the 20 lakhs worth of goods. Somehow I forgot. But for this contract, some 20 lakhs worth of goods are there. For this construction, let's assume a building. Building construction, the entire agreed value is 100 lakhs. But later the customer comes and say, no sir, you construct the building, okay. But for the construction of the building, certain bricks, cement, sand, certain goods, 20 lakhs worth, it is already there with me, so you need not supply that. So he's getting that thing reduced, and balance 80 lakhs only he's paying. Are you with me? So this is the amount that is paid. Are you clear? Therefore, my dear friends, please tell me. So originally I have agreed for 100 lakhs. Then the client comes and says, no sir, 20 lakhs worth of goods already there with me. Therefore, you don't supply it. You don't use it for the building. I myself will give. Therefore, balance 80 lakhs worth of contract alone you do, it's enough. Like that, they are renegotiating. Now, please tell me, my dear friends, should GST, let's assume GST is at 18%. Now, please tell me, my dear friends, should 18% be levied on this 100 lakhs or should it be levied on this 80 lakhs? What is your answer? Option A, 100 lakhs. Option B, 80 lakhs. What do you think is right? Please tell me the answer in chat. What do you feel? 80 lakhs only. B, 80 lakhs only. Any other? Any other answer? 80 lakhs. Now, please note, my dear friends, this is where you have to be very careful. Logically, everybody is answering 80 lakhs now because that is the actual amount of payment that is going. But please note, that's what I use the word carefully. Please understand, my dear friends. First, originally I have agreed for 100 lakhs, correct? When I put the agreement, construction agreement, when I put that, I have entered 100 lakhs, correct? Later, I am saying 20 lakhs, you need not supply. I myself have the bricks, cement, sand, you need not supply like that. But originally itself, I agreed for 100 lakhs. Therefore, if I agree that, then the GST liability gets freezed, right? So even though later point of time, 20 lakhs worth of materials I find, I myself have it, I cannot reduce it. That's what is given there by this clause. Please have a look at it, my dear friends. This 20 lakhs is the amount that the supplier is liable to pay, which means it is the amount that the supplier is liable to incur. But it has been incurred by the recipient. The client himself says, no, sir, I have the 20 lakhs worth of material. It has been incurred by the recipient. Then if it is not included, then it has now to be included. We are now talking about inclusions now. So this 20 lakhs, if it is not included, let's say 80 lakhs only it is there, then you have to now include this 20 lakhs and on 100 lakhs only GST is payable. So in the end, what you can understand, when you enter into the contract itself, be very, very careful. When you enter into contract itself, that time itself you see, do I have the bricks, cement, sand with me? Do I have certain materials with me? You take it out of the contract, right? Then you put 80 lakhs only agreed price, no problem. You pay it on 80 lakhs. Whereas if you agree for 100 lakhs, then later you reduce it by 20 lakhs, the 20 lakhs cannot be reduced. You have to pay on the agreed price. That's the critical point, right? So whatever you agree on that, initially agree on that, you have to pay the GST. So please be very careful. So this point number 2, I've given an example for that. Now point number 3, incidental expenses such as commission, packaging, etc. charged by the supplier to recipient. Now please note, my dear friends, here the word incidental expenses such as is used, which means it is not limited to commission and packing. Any expenses like this will be included. What other expenses? Have a look at it. Commission, packing already given in the section itself. I've given it as example. Apart from that, imagine a transaction of supply of goods. So many expenses will be incurred like inspection, design, testing. Because if I have to supply a machinery, it has to be tested. If I'm supplying equipment, it has to be tested. So testing. Then installation, big machineries, it has to be installed. Transportation, if I'm transporting the goods. Delivering it to the customer, transportation, insurance. When I transport the goods, I have to take insurance. So all these incidental expenses which are there like this. Please note, law uses the word such as commission and packaging, which means what? Not just a commission and packaging, any other expenses like design, testing, installation, transport, all those expenses will also be included. Then fourth one, interest, late fee, penalty. Now I'll give an example for this, pay attention. Okay, let me, there's no space here. Let me, just a second. If possible, I'll go to the first slide. Okay, let me give an example, my dear friends. The fourth inclusion is interest, late fee or penalty for delayed payment of consideration. Okay, now let me give an example. Have a look at it. Now let's say A agrees with B, right, to supply, let's say goods worth of, let's say 10 lakhs. And he says, okay, B has to pay me within You pay me within 3 months. This is the contract. Okay. So this is the contract. Now what happens is A supplies correctly. He supplies everything pakka. But B does not pay within 6 months. B does not pay within 3 months. What he does is he pays within, let's say, 9 months. He pays within 9 months only. That is, he's violating the contract. Are you with me? Now, in that case, A will not keep quiet. What he will do? Now, I have told you, you have to pay within 3 months. You have taken your own sweet time. Extra 6 months you have taken. So, there is a 6 months delay for me. Correct? So, for this 6 months delay, A will not keep quiet. What he will do? Okay, you pay me interest at, let's say, 80, let's take another percentage. 15% interest you pay. Whatever for 6 months delay is there, 6 by 12. Multiplied by 10 lakhs, whatever goods value is there. So roughly comes to what? I think 75,000 if I am right, or 7,500, whatever. Right. So so that much, whatever interest, let's assume it has to be paid. Okay. So therefore, B is not fulfilling the contract. He is not paying within time, within the agreed time. And A is collecting interest for delay in payment. 6 months delay is making payment. 9 months delay is making payment. Whatever delay is there, A is collecting the interest. Now the question is, on what value? Let's assume it's 7,500 for the time being. On what value should GST be paid? Should it be, or 75,000? I think 75,000. So on what value should GST be paid? Should it be paid on, let's say the GST rate is 5%. Now please tell me, my dear friends, GST 5% should it be paid on the original 10 lakhs, or now interest is also charged 75,000. On what value should GST be paid? Should be paid on 10 lakh 75,000, because clause number D says whatever interest is being charged, that has to be included. On this 10 lakh 75,000 only, GST has to be discharged. Are you clear? Right. So this is the fourth inclusion, my dear friends. All interest, or you may call it as sometimes late fee, or sometimes as penalty, whatever you may call it, but it should be for the delayed payment. In that case, this interest, late fee or penalty should also be added on that value only. You should pay the GST. Last one, subsidies linked to price. Subsidy linked to price excluding government subsidy. Please note, my dear friends, subsidy broadly two types are there. One, if it is a government subsidy, there can be a government subsidy, then there can be a private subsidy, right? So government subsidies are not included, whereas if it is a private subsidy, that alone is included. But there is one more condition also: the subsidy should also be linked to the price. Are you clear? So therefore, government is giving subsidy, not included, whereas private person is giving a subsidy, that will be included, provided it is linked to the price of the product, right? So in that case, it is also included. Now I'll give an example for this, sir. Which private party will give the subsidy, sir? I'll give an example. Now pay attention. Now let's assume, I'll again go back to the first slide. Now let's assume Tata Steel. You have heard of that? Tata Steel, big steel manufacturer. He's there in Jamshedpur. Okay. Now what he wants is, he wants a lot of smaller units to come up in Jamshedpur, because he wants a lot of raw materials for producing. He produces iron and steel products. Okay. Therefore, he wants a lot of suppliers to set up in Jamshedpur. So what Tata Steel will do is, okay, I want suppliers near me, because it will save transportation cost, logistics cost, all the costs it will save for me. So let me encourage my suppliers to come and set up in Jamshedpur. So what he will do is, he will say, okay, normally for the iron and steel, the market price is, let's say 1 ton, it is, let's say rupees 1 lakh is the market price. But if you come and set up the unit in Jamshedpur and supply to me, then in that case, I'll give you a subsidy of 25,000. You supply it for 75,000 alone, it's enough. Are you clear? Please note, my dear friends, in this case, the raw material supplier, he'll invoice only for 75,000. But this 25,000 will be later given as a subsidy separately. It will not be invoiced. Are you clear? Now, what value should GST be paid? Should it be paid on 75,000 or 1 lakh? Answer is, it should be paid on 1 lakh, because this is a private subsidy given by Tata Steel. Tata Steel is not government. It's a private person. So he's giving the subsidy. That subsidy will be added back. And on the full value, 1 lakh in this case, it has to be, GST has to be paid. Are you clear? So this is one example we can say of a private subsidy. Now, I'll do one thing. There are 5 inclusions. Okay. I think now time for a break as well. So there are 5 inclusions are there, A, B, C, D. I'll give you 30 seconds time. If you tell me I will ask you, tell me inclusion number D. Tell me inclusion number A. E, like that I'll tell the number or the alphabet. You have to tell me what inclusion. Okay, at least one word you have to tell me. In 1 or 2 words you have to tell me. So go ahead, I'll put the slide up by hearted. You tell me correctly. I'm getting good answers. I'll give you a break now, or else we'll just move on. Right. So therefore, I'll give you some time, 30 seconds. Please go. You just remember 1 or 2 words. Each alphabet, you remember 1 or 2 words. For example, point number D, interest. Point number E, subsidy, private subsidy. Point number A, other taxes and duties apart from GST. So other taxes. So on for point number C, incidental expenses. So on and so forth. Like that, you remember in 1 word. Okay, can I ask? Now I want everybody to answer. If I'm seeing the same set of person answering, you answer, I am happy, you answer. But I want others also to answer. If I'm getting good answers, I'll give a break or else no break. Therefore, please tell me. Point number E. Point number E. E for egg. Point number E. Subsidy. What subsidy? What subsidy? Private subsidy directly linked to price. Good. Point number C. Point number C. Point number C. Incidental expenses. Don't say commission, etc. Commission, etc. means incidental expenses. Good. Point number A. Point number A. Other taxes, other than GST, other taxes. Last. Point number D. D. D for dog. Point number D. Interest penalty or late fee for delayed payment. Good. So answers are good. I'm seeing all of you participating. Good. So we'll have a break. In my watch, time is now 4:32. So 5 minutes, okay, no issues. 4:40, we'll be back. We'll continue with the others and we'll finish off valuation. We'll finish off. Then we'll go to invoicing, debit note, credit note, all the invoicing provisions also, including e-invoicing also. I'll just give a small introduction. So we'll take a small 5-minute break. My watch, it is now 4:33 now almost. Therefore, 4:40, we'll be back. So you can just remain there. Just turn off your audio and video. That's it. So I'll also turn off my audio and video. Yes. So can we continue? Are all of you there? Please tell me in chat. Yes. Good. So therefore, in the last session we have seen input tax credit. We have concluded and we have moved on to valuation topic. In the valuation topic, we have seen that value normally is the transaction value, which is nothing but the sale price paid or payable, plus some inclusions are there, minus some exclusions are there. We have finished off the inclusions. How many inclusions are there? How many inclusions are there? Please tell me in chat. How many inclusions are there? 5 inclusions. Good. So now we are going to see the exclusions. What are the exclusions from the value? We are going to see that. Now having seen that, now let's move forward. I hope all of you are able to see my screen. Now, first, okay, if you've seen the screen, it's okay. I wanted to ask you that question, but okay. So please note, my dear friends, logically speaking, what will be excluded from the value? Discounts, correct? So on a transaction you give, whatever discounts you give, all those will be reduced from the value. Right now, please note, my dear friends, you may have come across in your earlier study period or whatever, many types of discounts, correct? So trade discount, cash discount, so on and so forth. So many types of discount you have come across, quantity discount, so on and so forth. But for GST law purpose, there are only 2 types of discount. Okay, one something called as a pre-supply discount. Now this is very, very important, my dear friends. Even for exam, practically everywhere it is very important. Second, something called as a post-supply discount. Okay, now what is pre-supply discount? There is another name for it. It is also called as invoice discount because it is shown in the invoice itself. The bill itself you are showing. That's called as an invoice discount or pre-supply discount. Whereas post-supply discounts means what? It is not shown in invoice. Sir, if it is not shown in invoice, where it is shown, sir? Please note, you will issue a separate document for reduction called as a credit note. Earlier we saw debit note, na? Debit note is for increase in the value, whereas credit note is there now. That is for all such discounts like post-supply discounts. Therefore, discounts can be of 2 types. One, something called as a pre-supply, other something called as a post-supply. Pre-supply also called as invoice discount. Post-supply also called as credit note discount. Please note these terms very, very carefully. Now, having seen that, now which discount can be reduced, sir? Please note, my dear friends, both discounts can be reduced. There is no doubt. Both pre-supply discount can be reduced, then post-supply discount can also be reduced. Sir, then why separately you are giving, sir? Pre-supply also can be reduced, post-supply can also be reduced. Then why are you giving separately, sir? Please note, my dear friends, pre-supply discount, there is no condition. The only condition is it should be shown in the invoice. That's it, which you already said. There is no other condition. Whereas in post-supply discount, there are certain conditions. What are the conditions in post-supply discount? Please note, my dear friends, there are 3 conditions. All 3 conditions are very important, both from exam point of view as well as practically speaking. These 3 conditions which are there in section 15, subsection 3, A, B, and C. They are the most important conditions which you should know. Now let's see through the conditions. So as far as post-supply discounts, credit note discounts, please note, as I said, they are given through credit note. Separately, they are not shown in the invoice. So for these post-supply discounts, there are 3 conditions. What are they? 1, the post-supply discount should be established from the agreement. That is the agreement, whatever entered into between the parties, the contract, whatever is there between the parties, it should clearly say that for this particular purpose, this much discount I will give. Right? So I'll give an example. Cash discount is an example that we can use here. I'll give an example. Now, pay attention very carefully, my dear friends. Let's assume we already seen one example now. Let's go back to the earlier slide. We have seen one example. I'll use that. Now, A is entering into agreement with B for supply of goods worth of 10 lakhs, payment within 3 months. Earlier, we saw that he's paying after 9 months. That is, he's paying after 6 months. He's paying with a delay of 6 months. So after 9 months, he's paying. Then we will charge interest. And we saw that the interest is included. Correct? You have seen this example. Now let me take the reverse of this example. You are giving the same 3-month credit period, but B is paying within 1 month itself. He is paying. That is, he is early paying. Early payment is being made by 2 months. Now B will not keep quiet. What will B say? Now when I pay late, you are charging interest now. Same way when I'm paying early here, 2 months I am paying early. So give me some discount. So B will ask for a discount. So this is a good example of what is called as a cash discount, my dear friends. So such that cash discounts, please note, we will not show it in the invoice itself because we will know this discount only when B is paying. He is paying after 1 month. Only then we will give that discount. Are you clear? Therefore, such discounts are not known at the time of the invoice. Later only it is known after 1 month, 2 months, 3 months only we will know. Therefore, the agreement should clearly say that, okay, 2 months early you pay 5% discount. 1 month early you pay 2% discount. Like that, the agreement should clearly mention for early payment how much discount you are going to give, how much cash discount you are going to give. It should be clearly mentioned in the agreement itself. So let me come back just a second. So therefore, first condition is that the agreement should clearly mention for how much, what situation, how much discount you are giving should be clearly there in the agreement. So first condition is the discount should be linked with the agreement. Second, the credit note should also be linked with the relevant invoice. Right now, please note, my dear friends, as I said, this post-supply discount we are giving through a credit note. Okay. Therefore, you should have a track like this. Credit note number 1, 2, 3 like that. So credit note, let's assume 3 credit notes we are giving in a month. We should clearly track that this credit note number 1 is for invoice number 100. This credit note number 2 is for invoice number 125. This credit note number 3 is for invoice number 127. Like that, the credit note should also be linked to the relevant invoice. For this invoice only, I am giving a credit note. For this supply only, I am giving a credit note. Like that, the credit note should also be linked to the relevant invoice. Okay. So third one, this is very, very crucial thing which requires some thinking to understand. The ITC should be reversed by the recipient. This I'll explain again. I'll go back to the first slide. This I'll explain using that same example itself. Now I want your interaction here. Okay. Let's take the same example. A is selling to B goods worth of 10 lakhs. Now let's assume 10 lakhs. Okay. GST, did we mention? A 5% GST we have taken. Okay. So 5% GST we have taken. So 50,000 GST. So this is the invoice. This is a GST at 5%. So total 10,50,000. Okay. Now please note, my dear friends, A is selling to B goods worth of 10 lakhs, GST 5%, therefore total 10,50,000. Now B is making an early payment. He's paying after 1 month itself, therefore you are giving him, let's say, let's take a different percentage so that we don't get confused. He's giving a 10% discount now, okay? So therefore, credit note is giving for 10% means how much he'll give for 1 lakh. Okay, so for 1 lakh, he will give a credit note, he'll give a discount, he will reduce it. So on this, the GST will be 5,000. So totally, the credit note will say the reduction of 1,05,000 will be reduced. Now, is the example clear? Yes. So originally my supply is agreed for what? 10 lakh plus 50,000, 10,50,000. Now I am giving a discount for what? 1 lakh. 1,05,000 GST on that. 1,05,000 is the credit note value. Are you clear? Now please note, my dear friends, this is the invoice value. Okay. This is the invoice details, whereas this is the credit note details. Are you clear? Now please tell me, my dear friends, originally 1 month back, let's say in the month of July, this credit note is given in the month of August, let's assume. This invoice is given in the month of July, credit note in the month of August. Now in the month of July itself, A would have paid this 50,000 GST, correct? In the month of July itself, on this 10 lakhs, whenever he has sold, he would have paid the 50,000 GST, collected it from B, 50,000. He would have, irrespective of whether he collects or not, he has to pay, that's a different matter. But let's assume he has collected also from B 10 lakhs plus 50,000, 10,50,000, everything has been collected, let's assume. Okay, therefore A has paid this 50,000 as GST to the government, and therefore B would have also claimed what? The recipient would have also claimed the ITC, correct? For 50,000. So B would have already claimed the ITC on that 50,000. Are you clear? In the month of July, this transaction is over now. So A has paid 50,000 tax, B has claimed 50,000 GST as ITC. Okay, he has claimed the benefit. Now what is happening in the month of August? 5,000 out of 50,000 GST which has been paid. 5,000 because 1 lakh is given as a credit note. 5,000 GST A will reduce. from his further GST payments, A will reduce this GST from his further GST payment to the government. Are you clear? A is again reducing this 5,000 because he's giving a discount to B. Now, but what B would have already done, how much credit he has already, so therefore now tell me, my dear friends, net, he has already paid 50,000, now he's reducing 5,000, net how much GST has paid? This 5,000, please note, he'll reduce in the future, from future GST payments, that's different matter. But net GST, how much A would have paid? Net GST paid by A, how much? It is 50,000 minus 5,000, 45,000 he has paid, correct? Is it right? But B has already availed the credit for how much? In the month of July itself, he has availed the credit for 50,000. Therefore, now what he has to do? Since A is reducing 5,000 of his GST, which he has to pay to the government, is reducing 5,000 from that one, B also has to reduce the benefit he has already claimed. He has already claimed 50,000 ITC as benefit. Now that benefit he has to pay back to the government. Therefore, that 50,000 ITC he has to reverse. Reverse means what? He's paying back the ITC to the government. Are you clear? Therefore, this condition is a little tricky to understand, but once you put this diagram, you'll understand it better. Are you clear, my dear friends? So this is what is the third condition. Now, let me come back to the condition. All three conditions are very, very important, which I want you to go through once, and I want you to tell me the conditions as well. I'll put it very, very simply. First, the credit note should be linked to the agreement. Second, the credit note should also be linked to the relevant invoice. Third, the ITC should be reduced, or pardon, ITC should be reversed by the recipient. Three conditions are there. Okay, I'll give you some time. I'll give you some 15-30 seconds time. Go through it by heart. Then I'll again ask you condition number. You tell me. Okay. Now I'll tell the condition number. Can you please tell me? So, post-supply discount can also be reduced, but three conditions are there. A, B, C. What is condition number B? Can you please tell me in chat? Condition number B. Just tell me very simply. I want answers. What is condition number B? I'll wait for your answers. Credit note should be linked to the invoice. Good, good. What is condition number A? Credit note should be linked with what? Condition number A. Agreement as well. Agreement should contain a clause. In the agreement clause, clause number 3A, clause number 4B, like that. In this clause, this agreement is there, this discount is there. You have to pinpoint to the agreement. Then third, the supplier can reduce the can reduce the discount on that. He can reduce the GST also. In our example, 50,000 from that 5,000 worth of GST he can reduce. Net 45,000 he pays, it's enough. But the recipient should also reduce his what? You would have claimed 50,000 as ITC based on the invoice. Now based on the credit note, he must also reduce his what? He must also reverse his third condition. Please tell me. The recipient should also reverse his what? The recipient should also reverse his dash. The recipient should also reverse his input tax credit, whatever he has claimed. The extent of the discount, he should also reverse or pay back the ITC which he has claimed as benefit. Are you clear? Therefore, three conditions are there, my dear friends, as far as post-supply discount section 15.3, very, very important, both from exam point of view as well as from practical point of view, right? Now, what are, sir, you have told me the concept, sir, but can you give me some examples, sir? Now, please note, my dear friends, what are example of invoice discount or pre-supply discount, all these discounts? For example, trade discount, quantity discount, trade discount, quantity discount, almost the same meaning, okay? You buy some, let's say you will tell your customer, okay, you buy some 100 kgs of this product, yes, I will give you a discount. You buy 1,000 kgs, I'll give you more discount. You buy 10,000 kgs, I'll give you even more discount. Like that, more the quantity, more the discount you will give. That is one example of pre-supply discount or an invoice discount. This will be shown in the invoice itself. You buy 100 kg, immediately 5% discount. You buy 1,000 kg, immediately 10% discount will be shown in the invoice itself. Whereas, what are examples of credit note discount? As we already seen, one example is cash discount. You are paying early. 3 months credit period I'm giving, you are paying within 1 month itself. Okay, 2 months you are paying early, I'll give you a discount. So this will not be shown in the invoice, it will be given separately after 1 month, you will give it as a credit note. Apart from that, there is something called as a turnover discount on reaching the sales target. For example, Maruti is there, Maruti car. Maruti Suzuki will say, Maruti Suzuki Private Limited will say to its dealers, Kun Hyundai, Kun Honda, like that. Let's say Kun Maruti is there, right? So it will tell to its dealers, okay, you sell 100 crore worth of cars this year. Once you sell 100 crores, once you reach the target of 100 crore sales, I will give you some 10% discount, like that. Please note, my dear friends, this is called as a sales target discount. So this will be given normally in wholesale transactions. This discount also we will not know immediately. The dealer will be given a 100 crore target. He may reach it in some dealers may reach it in 7 months. Some dealers may reach it in 9 months. Some dealer may not even reach it. So whenever he reaches, only that discount will be given. Therefore, this is given separately through a credit note. Not it is not shown in the invoice. So therefore, this is one example of a credit note or a post-supply discount. Are you clear? So therefore, all these are examples. So post-supply discount, pre-supply discount, both can be reduced. No problem. But for post-supply discounts, 3 conditions are there. For pre-supply discount, no conditions are there. As long as it is shown in the invoice, you can reduce it. No other conditions there. Whereas for post-supply discount, it should be shown in the credit note, no doubt. But apart from the 3 more conditions are there. So it is very, very important. So having seen that now, let me come back to the things we are discussing. Now we have seen that in case of, so therefore now we have seen exclusions also, my dear friends. Please note there are only 2 exclusions, pre-supply and post-supply discount. That's it. No other exclusion. So 5 inclusions are there, 2 exclusions are there. Please remember. Now, please come back to the slide, my dear friends. You have seen that transaction value is nothing but the sale price plus inclusions. 5 inclusions are there. Section 15, subsection 2. And 2 exclusions are there. Subsection 3. Okay, we have seen this. But remember, for adopting this method of sale price plus inclusion minus exclusion, there are 2 conditions to be satisfied. Condition number 1 and condition number 2. 2 conditions to be satisfied. Sir, your question will come. Sir, what if, please note, my dear friends, both the conditions to be satisfied. A and B, both conditions, 1 and 2, both conditions to be satisfied. Now, your question will come. Sir, what if I am not able to satisfy condition number 1, sir? That is, parties should be unrelated. No, that is the first condition. But what if the parties are related, sir? What if parties are related, sir? Or second one, we have seen that barter exchange should not be there. Non-monetary consideration should not be there. Sir, what if non-monetary consideration is there, sir? Barter exchange, if it is there, sir, what to do? Now, please tell me, my dear friends, this is very logical. You have seen many transactions, you know, where you, let's take car itself as an example. You want to buy a new car. What you will do, person has an old car, let's assume. He will exchange the old car, let's say some 1,50,000. He'll exchange the old car. New car, he will buy for 7 lakhs, 7, 8 lakhs, let's assume car like Swift. 7 lakhs he will buy. The difference he will pay it in monetary consideration. Is it right? So therefore, this barter transaction, exchange transactions, many times it happens. So if it happens, what to do? Condition number 2 not satisfied. Old car exchanging for new car. Second condition not satisfied. What to do? So for that only, please note, my dear friends, if one of the 2 conditions also not satisfied, we will go to valuation rules. I said na. So section 15.4 says that we have to go to valuation rules. Valuation rule number 27 to 35. Right. So these rules we have to go to in that case. Now, what we'll do is, for the limited time which is there, I am not going to discuss exhaustively. I will directly show you a flow chart explaining all the rules in one flow chart itself. Just a second. One slide I'll go. Everything, all the rules we'll see it in one shot itself. Right. Now, please note, my dear friends, again I'm asking you so that you are in the correct flow. We are now going to see the valuation rules. Now, when will we go to valuation rules? Can you please tell me how many conditions are there for transaction value section 15.1? How many conditions are there? Please tell me in chat, so that you're also on the same page. How many conditions are there? 2 conditions are there. What is the first? What is the second condition? What is the second condition? What consideration should not be there? Price should be the sole consideration. What sole consideration? Price should be the sole consideration. That is, monetary consideration only should be there. What should not be there? Barter exchange like that. Non-monetary consideration should not be there. If non-monetary consideration is there, means we have to go to rules. Okay. If barter exchange is there now, we have to go to rules. Valuation rules. Okay. What is the first condition? What is the first condition? Please tell me. What is the first condition? There should be a buyer and seller. Seller and buyer, supplier and recipient should not be related. So if they are related, then we have to go to valuation rules. Are you clear? So if supplier and recipient are related, they are related, sir, then what we have to do? We have to go to valuation rules. So in these two situations where the conditions are violated, conditions are not satisfied, then in that case we go to valuation rules. So that is what is given there, my dear friends. Please note, as we have seen, the second condition is price should be the sole consideration, correct? That is, monetary consideration should only be there. That is the thing. In that case, if it is satisfied, yes, sir. Then second condition, parties are not related. Okay, we have seen this as a first condition, this as a second condition, not a problem. So whatever it is. Price is sole consideration, yes. Parties are also not related, yes. Then no problem, we can follow transaction value. Section 15, 1 plus 2 minus subsection 3 exclusions. We can go by that method. What we have seen so far, we can follow that. Please note, in that case, both conditions should be yes, sir. Sir, what if one condition? No, sir. That is, what if the parties are related? The parties are not related. No, now what is the meaning? Parties are related. Then in that case, please note, my dear friends, here you have to observe very carefully. You have to see, parties are related means what? The supplier and recipient, correct? Supplier and recipient are related parties. Then in that case, what we have to see? Please note, we have to see whether the recipient, he can claim ITC in full. Whether the recipient can avail ITC in full. Yes, we have to see that. Sir, I have a question, sir. When can the recipient not avail full ITC, sir? Did we discuss this yesterday? When can the recipient not avail the ITC, sir? Please tell me. I told you section number also. You have to remember like that I told you. When can the recipient not entitled to ITC? When is the ITC blocked? Okay, good answer, Prithvi Prakash. Not registered. You have understood the basics. That is one situation. Other situations. Good, Prithvi, good answer. I am very happy. Any other situation where the ITC is not eligible for the recipient? We have discussed many transactions now. Section 17 by Kritika, good. Section 17 by so many things we have discussed now. Less than 13 seating capacity, passenger transport vehicle, life insurance, health insurance, so many construction, so many things we have discussed. So in all these cases, yeah, good. So fine. So in all these cases, he will not be entitled to ITC. Therefore, please note, if the parties are related parties, then if ITC can be availed in full by the buyer, yes or no, we have to see. If yes, no problem. If ITC is fully eligible, that is, there is no restriction like insurance or construction, there is no restriction, or registered, unregistered person not there, he is entitled to full ITC, yes, sir. Full benefit he can claim, yes, sir. Then the actual price, whatever the party is charging, let's say seller and buyer in this transaction, the amount charges, let's say rupees 1 lakh. So whatever price actually charged, that will be taken, no problem. But if the ITC is not eligible, that is what we have seen, unregistered person or section 17(5) in all these situations. But ITC is not eligible, what we discussed just now, ITC is not eligible, then we have to go like this. What? We have to take the open market value. We have to take the market value. Please note, if the ITC is not eligible, let's say the transaction they are charging 1 lakh. This will not be taken. If the ITC is not eligible for the recipient, this 1 lakh will be ignored. First case we can take. If ITC is eligible, no problem, we can take. This whatever agreed value you can take. But if ITC is not eligible, no. Right? So if ITC is not entitled, in that case, this 1 lakh will be rejected. What values the parties are putting, related parties are putting, it will be ignored. Sir, if I'm ignoring this, what value I should check? You should check the market value. Okay, this transaction market value is 1.5 lakhs. Then in that case, 1 lakh will be ignored. The market value 1.5 lakhs will be taken. Are you with me? So this is to ensure that the parties are related parties. They are not undervalued. They are not putting lesser value. They are not paying lesser tax. To ensure that you ignore the actual value and take the market value. Second, like kind or quality. Like kind or quality means, let's say, the parties, seller and buyer related parties, they are selling product X. Sometimes product X may not be there in the market. Is it possible that product X may not be there in the market? It may not be sold in the market. Therefore, but I'll give an example. Let's say the seller S is supplying to the recipient R a Dell laptop. Let's assume the product is a Dell laptop. Dell, let's say Inspiron X560. That is the model. Somehow this model is not there in India. This product does not have a market. Market value you cannot find out. So this first one you are not able to find out. Then in that case, what can I do? Can I keep quiet? No, you have to find the value. So what you will do is you will take like kind of quality. Like kind of quality means what? X560 is not there, but I have X559 or X561 model. So I have a different model, but it is very, very close to that Dell X560 model. It is very close to that. So you will take this like similar identical products you will take, and for that what is the value? Okay, 1.5 lakhs. Okay, that is the value, you will take that. Are you with me? So therefore you will take that product itself here. X560 is there now, that market value itself you will take. Or if it is not there, then you will take the like kind of quality related nearby product, identical or similar product you will take. X559 model, X561 model, closely related, you will take that. Or if this is also not there, sometimes this may also not be there, then you will go on cost plus method. So X560 model, that market value is not there, and identical goods, similar goods are also not there. Then what we'll do, this X560 cost we will find out. What is the cost of production? On that you will add 10% as a profit margin. So cost plus 10% will be deemed as the sale price. Are you with me? So there is a third method, 110% of COP means cost of production. So whatever cost of production is there, you take it plus add 10% profit margin, that will be equal to the sale price. Are you clear? Therefore, please note, my dear friends, you have to go one by one only. You cannot change the order. First, you have to find whether this product has a market value. Yes, means you will take that. If this is not there, then only you will come to 2. If this is also not there, only you will come to 3. You cannot change the order like you want to. Sir, can I take cost plus 10% method first itself? It's very easy, sir. Can I take that? No. You have to see open market values there. If it is not there, then see identical or similar goods is there. That is also not there. Then only you will come to cost plus 10%. Are you clear? So therefore, 3 methods are there, my dear friends. So please have a look at that one. So having seen that, so this is in case parties are related parties. First condition not being satisfied. We have to go by this method. We have to see whether recipient entitled to ITC or not. That you have to see based on the 2 methods are there for valuation. Second method, there are 3 ways in which valuation is done. Now, in case the first condition is not satisfied, what is that? That is, or in our first slide, second condition, that is, price is not the sole consideration. That is barter or exchange. There is barter or exchange. In that case, what I should do? Price is not the sole consideration. No means what? There is barter or exchange. Then in that case, what I should do? Please note, my dear friends, it is very similar to related party valuation. You see, same methods are here. Same methods are here. Cost plus 10 is also there. Cost plus 10 is also here. So same methods are there. So first, second, third, all the 3 methods are here. So this is their open market value, that value I take. Like kind of quality, that also same as what we have discussed, or cost plus 10% method, that is also given as 4th method here. Okay, but there is one additional method, second method. What is that? In this case, please note, my dear friends, it is barter or exchange. Now, therefore, for considering it is a barter or exchange, one extra method is given. What is that second method? I'll explain. Now, please note, my dear friends, take the example of barter or exchange. Let's assume some X is there, Y is there. Car dealer, X is car dealer. Y is the customer. Okay, the customer is giving old car, as we have discussed, for 1 lakh, and the car dealer X is selling new car for, let's say, 7 lakh. So the customer is exchanging old car, therefore, for 1 lakh, total 7 lakhs, therefore, minusing this 1 lakh, he will pay 6 lakhs. Is it correct? So this is how normally it works. Therefore, now what this method says is very simple. If this new car, you find out the market value as 7 lakhs, you're able to find out it's good. You take that as the open market value, first method. Sometimes this new car may not have a open market value. The 7 lakhs value, sometimes you are not able to find out how. we have taken a car like Swift here, but take a car like Tesla. Does Tesla have a market in India? No. It is still in operational mode in US, testing mode. Therefore, it does not have a market value. So if I'm not able to find out the market value, like the 7 lakhs, I'm not able to find out, then no problem. This side, you are not able to find out value, you find out the value this side. You take what the customer is exchanging old car, that value you take, that is called as the additional consideration. And what he's paying 6 lakhs, that price. So these two things you add up. So you go from this side. So 1 lakh plus 6 lakhs, 1 lakh is the old car and 6 lakhs is the payment. So these two you add up, you get the same value, 7 lakhs. Are you clear? Therefore, from one side, new car, you are not able to find out the value, no problem. You find out the old car, what is being exchanged, that thing you find out the value plus whatever payment is being made. That also you take, add up both, that will give you the value. So this one extra method, considering barter or exchange is there, typically this is how it works. So considering that one extra method has been given. Apart from that, everything else is same. Find out market value, or if not possible, like kind or quality, or if not possible, cost plus 10%. All these are same as what you have discussed. Are you clear? So having seen that, it should be clear. So that's about it, my dear friends. Others, not that relevant right now. Okay, so my dear friends, in the earlier discussions, what we have done is we have completed section 15, 1, 2, and 3. This is one block. Transaction value. 2 conditions to be satisfied. If 2 conditions, one of them are also not satisfied, then we have to go to rules. So this is the flow chart. In this flow chart, complete rules I tried to explain. So in that case, section 15.4 we have seen plus the relevant rules that we have seen that. Right. So this valuation I'll bring to a conclusion. So as I said, you can also refer further books at your end, or you can also reach out to me if you want any further information regarding valuation. So let me move on. One more topic is there for you. Just a second. One minute. Okay, please tell me if just you're able to see the screen. Are you able to see the screen? New screen? Please tell me. Yes or no? Are you able to see the new screen? Yes. So therefore, please note, my dear friends, now we are going to the procedural areas, which is invoice, time permits, debit note, credit note, so on and so forth. What is invoice? When it should be raised? How it should be raised? What is the format? So all these documentations, apart from invoice, what other documents are there, etc., etc. We are going to see the documentary aspects. Right. Now, can anyone tell me why this invoice is important? Now we are going to see this documents alone. Now, why this invoice is important? Can anybody tell me in chat? Today's discussion itself. Based on that, you tell me, or generally you think and tell me, why is the invoice important? Please tell me. Sir, invoice is a section. Invoice, everybody knows me. Why is the invoice important? Please tell me. Hello? Is the question clear? Sir, no, sir. 5:15, I will stop answering. Please note, my dear friends, invoice, it's a good Rohini, your answer is the best. Invoice is the proof of the transaction. It is the proof that, let's say A and B are there, they have concluded the transaction, and this is the terms of the transaction, terms and conditions, the price especially, and how much tax. All this will be crystallized in the invoice. Just a second. Just a second. Yeah. So therefore, good answer, Rohini. So it is a proof of the transaction. Everything will be given in the invoice. It is a proof of the entire transaction. Now, any other importance is there for the invoice from tax, GST perspective? Any other importance is there? Okay, for getting the payment, okay. That's commercially, your answer is right, Narpoma. Any other answer? From GST perspective, why invoice is important? Because based on that only the supplier will pay tax, correct? So based on the invoice only, based on that amount mentioned in the invoice only, supplier will, just now we have seen a valuation. Valuation, what did we see? What is the value for the GST rate? Whatever is shown in the invoice plus inclusions minus exclusions. Therefore, it shows the value of supply, it shows good time of supply also, good answer. Value of supply, time of supply, everything is shown in the invoice only. Okay. Now, since you have said time of supply chapter over for you. If it is over now, my work is very simple. Is time of supply chapter over for you? Please tell me in chat. I think 8 days, 8th day, time of supply definitely should be over. Now, can you please tell me in chat whether time of supply chapter is over? Time of supply over. So I will ask you questions since you have accepted, because everything invoicing provision is based on time of supply only. So good. So my work is very simple. Now, please note, my dear friends. So therefore, invoice is very, very important. Based on that, only supplier will pay tax. Not only that, based on that, only recipient will avail ITC. Correct? We have seen in today ITC 5 conditions for ITC. We have seen. What is the first condition? The recipient should be in possession of the invoice or debit note in Patama or tax paying document in Patama. So based on the invoice only, the supplier will pay tax. The recipient will also avail the ITC. Therefore, that's why it's very important. So having seen that, since you have said time of supply chapter is over, now my work is very easy, because all the provisions of the invoice you should definitely have covered in time of supply. Now, please tell me, my dear friends, as far as service is concerned, within how many days the invoice should be raised? Definitely time of supply, you should have seen this. Time of supply over means invoicing provision almost over. I will not even take the pains of telling, because ditto provisions are therefore time of raising the invoice. So please tell me, my dear friends, if it is a service, within how many days should I raise the invoice? No answer. Huh? Tell me, definitely time of supply, you would have seen this. So it means either one, it was covered in class and you are not present in class mentally or physically, or something else you did not understand. What is it? Tell me, I want the answer. Definitely time of supply, you would have seen this. 30 days, good answer. Right, so in case of services, 30 days, within 30 days of completion, date of completion or date of payment, whichever is earlier. So date of completion or date of payment, whichever is earlier, from that 30 days, good. You are checking your notes, it's good. Notes are part today, you can tell the answer, no problem. I want everybody to go to your notes and see and tell, no problem. Right, 30 days, within 30 days, it has to be raised. Good. Now, so in case of services, 30 days time is there. In case of goods, what is the time limit? Can anybody say? In case of goods, what is the time limit? Quick, we don't have a lot of time. Okay, in case of goods, if there is a movement of the goods, there is movement, that is the goods are moving, the seller is delivering to the buyer. Movement, transportation is happening. When the invoice should be raised? After movement is over or before movement is commenced? When the invoice should be raised? Please tell me the answer in chat. Quick. All this will be there in time of supply. Please tell me, my dear friends. Before, good, Sairam, good. So in case of movement is there, before the movement is commencing itself, we have to raise the invoice, because during the transportation, the good should be there, accompanied along with the invoice. That's the reason. Good. Not 6 months before, that is for sale on approval basis. So please be very careful. Don't confuse. Normal cases where there is movement, before the movement commences, you have to raise it on or before movement. Now, so these provisions, please recollect. So since time of supply, you have seen all these provisions. I'm not discussing much regarding this. So this is exactly what is there in the slide. Everything you would have seen in time of supply. Okay. Now, coming to the next situations. So, okay, invoicing provisions you have seen. Time limit in time of supply itself we have covered. I'm not covering that. Now, apart from invoice, is there any other document, sir? Yes, there are certain other documents. Please note, my dear friends, for smaller supply, that is a supply values less than ₹200. That is, you are going to a departmental shop, buying one Cadbury's chocolate for ₹5 you are buying. Should I issue an invoice for that separately? Answer is no. Right. So for small invoices, to an unregistered dealer, which means what? It's a B2C transaction. The customer does not have a GST number. So it's a B2C transaction to an unregistered dealer and the value is also less than 200, then you can issue a consolidated tax invoice at the end of the day. That is, all such small transactions put together at the end of the day, one invoice you raise, it's enough. So this is to ensure ease of doing business. Okay, so for small supplies, less than 200 to B2C, consolidated tax invoice can be raised. In case of exempted goods or service, then instead of invoice, no invoice is there. Instead of invoice, you will have something called as a bill of supply. All these documents you should know, my dear friends. When they ask you what documents are there in GST, sir, invoice da sir, where are the documents, sir? No, there is also a consolidated invoice, bill of supply. Then I will ask you at the conclusion, next 10 minutes, I will ask you what documents are there. You have to tell me. Okay. So if it is an exempted supply, bill of supply will be there, not invoice. Sir, what is the difference between invoice, bill of supply? Sir, very simple. It is exempted, na? Therefore, bill of supply, no tax. That's it. Apart from tax, everything else will be there. So in case of an exempted goods or service, bill of supply will be issued same as invoice, but it will be issued without tax. In case of advance, I have to, if I am receiving an advance, before supply itself, receiving an advance, receipt voucher has to be issued, whereas the advance is being refunded. If I am refunding the amount, then refund voucher has to be issued. All these documents, please remember. At the end, I will ask you, sir, what documents are there? You have to tell me. What situation, what document I will ask you. So advance received, receipt voucher, advance refunded, refund voucher. Then in case of RCM, we would have seen discussed earlier in certain services where RCM is applicable, then you have to issue something called as a self-invoice. Okay. Now please tell me, my dear friends, in case of RCM, who's liable to pay tax, supplier or recipient? Please tell me in chat quickly. We don't have time. In case of RCM transactions, who's liable to pay tax, supplier or recipient? Recipients, good. Can you give me an example for RCM services? Example for RCM services. Quick. I'm not asking you section number. I'm not asking you the section numbers. I'm asking you example for RCM. Advocate service, GTA service, import of service. Have you heard of all these, right? So all these services are covered under RCM, my dear friends. So if it is not covered, definitely I think subsequent sessions will be covered. So therefore, in case of services like advocate service, the recipient client will pay, not the advocate. In case of GTA, goods transport agency, the GTA, goods transport agency will not pay, the client, the recipient will pay. So like that in RCM, goods and services, the recipient will pay. In that case, the recipient himself will issue a self-invoice. That's why it's called a self-invoice, because it is issued by the recipient himself. And at the time of making payment, RCM payment to the supplier, he also has to issue payment also. Therefore, two documents he has to raise. In case of an RCM, the recipient should raise a self-invoice at the time of supply, and at the time of payment voucher also has to be raised. So two documents are there. So please note all these. Now, apart from that, in certain cases, instead of invoice, without invoice, that is in these situations, invoice is not there. There is something called as a delivery challan. So delivery challan will be issued. 4 situations are there. 1, 2, 3, 4. In these 4 situations, delivery challan will be issued. What are they? In case of supply of liquid gas, where the quantity is not known, how many kgs of liquid gas, I don't know. Then in that case, no problem. You just issue a delivery challan. Later, you can issue an invoice when you know the quantity. Then at the time of sending the goods for job work. Yeah, so I'm hearing some audio there. Can you please mute yourself? So in case of transportation for job work, again, delivery challan can be issued. In case the supply is transportation is for reasons other than supply, other than sale or supply, right? Again, in that case, delivery challan will be issued. Then last one, notified supply. There is no notified supply as on date. But if it is notified, then again, delivery challan shall be issued. So these are the 4 transactions, right? Now, I think first, second, and fourth, you can understand. Fourth, there's nothing, more transactions there, therefore I leave it. Now, third transaction, can you give me an example, sir? Transportation of goods other than by way of sale or supply. Can you give me an example, sir? I'll give you an example. Now, just imagine a small supplier, let's say in North Madras, North Chennai, in Paris. Let's say he's selling some small items. What he will do is, from North Madras, he will come to Central or South Madras. He will take the goods in a small lorry. He will not know that these goods are meant for that. Let's say he's taking some 100 items. He will not know how much he will sell. When he takes in the small lorry and he will go doorstep to doorstep, sell the items. Imagine some toys. Okay. So therefore, he is selling small items door to door. That is called as line sales. That is when you are taking the goods from your factory or from your office, you do not know how much will be sold. 100 units I am taking, but how much I will sell by the end of the day, I do not know. So this is what is called as transportation by way of other than supply. That is when I am starting the transportation, I do not know how much will be supplied. So therefore, what you will do is you will put a delivery challan for the entire 100 units, and whenever you sell it, let's say 70 units I am selling, I will put an invoice for the 70 units alone. Are you clear? 30 units I'll bring back. So this an example for the third situation where transportation, a reason of other than by way of supply or sale. So in all these situations, my dear friends, delivery challan will be issued. Now, format of invoice, have a look at it. This is the format of invoice. Without knowing this, you cannot finish the session. Now, invoice, what format is there? I'll also share this with you. So in the invoice format, supplier details will be there, including GST number, serial number. Please note, invoice should be serially numbered. 1, 2, 3 like that. You cannot miss a number. No, sir, I will go from 100, then I will jump to 250. No, invoice should be serially numbered. If it is not serially numbered, means department will think you are doing some evasion. Therefore, you should serially number it. Then details of recipient, details of consignee. Sometimes the recipient may be different, consignee may be different. If they are the same, no problem. But if they are different, then you should mention them. We call this as bill to address. We call this as ship to address. Okay, so if the recipient and consignee are different, then they have to be mentioned separately, bill to and ship to address. Then description of the item, HSN code. All items will have an HSN code, 8-digit code will be there. Quantity, so on, rate, total value, discount if any. I told you not discount today, we have discussed. Invoice discount, so pre-supply discount, that has to be mentioned. So taxable value, a rate of GST. Here everything is 9% means CGST, SGST 9% means total 18%. So total GST, total value including GST. Then more importantly, please note my dear friends, place of supply, where the goods are being supplied, place of supply, time of supply, when it is being supplied, date, everything has to be mentioned. So all these are the formats. Now please note, I'll share this with you. Invoice, so many things are to be mentioned. I've just shown the format. So based on this, you can try to understand. Now, in other documents also, it is very similar to invoice because we have seen today many types of documents we have seen, right? Like bill of supply, so on and so forth. They are also very similar format only, not very different. For example, I told you bill of supply means everything will be there, but tax will not be there. Like that, small changes will be there. Are you able to follow? Therefore, the basic format. Based on that, the other things will involve some little bit of changes. So you can try to visualize that. So now, having seen that, with this, I'll conclude the section as well. Now, one new concept has come called as e-invoicing, wherein whatever invoice you raise, you have to upload it in the GST portal, and the GST portal will assign a number called as an IRN. Okay, so just imagine this invoice. You will upload this entire invoice to the portal and generate something called as an IRN, invoice reference number from the portal. Okay, it is nothing but a registration number, invoice reference or registration number. You will generate a portal. So once you upload the invoice in the portal and generate an IRN, that is called as an e-invoice. Please note, my dear friends, this e-invoice is mandatory if my turnover is more than 500 crores. I have to generate this e-invoice, IRN number I have to generate, and along with the IRN number, the GSTN portal will also give you something called as a QR code. Both these have to be mentioned in the invoice. So the invoice, apart from the logo, now it also has to contain a QR code separately. And apart from this, it also has to contain a IRN invoice reference number. Okay. Now, therefore, please note, my dear friends, this IRN and QR code, etc., e-invoice is mandatory only if the turnover is more than what? 500 crore. Big companies, only for that. So this I'll stop. Now I'll ask you a few questions alone so that you have understood. But before that, do you have any questions? Clear or very clear? Clear means questions will come. Sir, very, very clear, sir. Everything above the head, sir. Very clear means no question. So tell me, is there any question? Quick. Clear? Very clear? Or clear? Clear. Okay. So I'll ask you, if you don't have any questions, I'll ask you a few questions. So as I said, I'll tell the transaction, you tell me the document to be issued for that. If it is a B2C transaction and the value of the supply is less than 200 rupees, then what should be issued at the end of the day? Not delivery challenge, consolidated invoice, good. If it is an RCM supply, the recipient himself will issue two documents. What are they? RCM supply. Recipient himself will issue two documents. What are they? Self-invoice, then at the time of payment. Self-invoice apart from that. Payment voucher. Self-invoice and payment voucher. Then if it is an exempt item, instead of invoice, what I will issue? Bill of supply. Good. Advance received. Not bill of exchange, yeah, bill of supply. Don't confuse. It's not a bill of exchange, bill of supply. Okay, in case of advance received, not advance voucher, received voucher. In case of advance refunded, refund voucher. Good. So I've given you the overview of all the documents. Please note, my dear friends, apart from that, debit note is there, credit note is there. Credit note already we have seen a discount. In case of pre-supply discount, nothing is there. Post-supply discount, pre-supply discount shown in the invoice itself. Post-supply discount means they will issue a credit note. Apart from that, you are reducing the value due to certain reasons. Apart from post-supply discount, some other reasons are there. For example, sales return, the value is getting reduced. Or sometimes erroneously, instead of 1 lakh, I would put 1,20,000 as the value. So you want to reduce the value. So in certain circumstances like sales return or some other situation where the value is getting reduced, their credit note will be issued. Now debit note is opposite. Debit note will be issued when the value is supposed to be increased. Sir, 1,50,000 is the value. So somehow I put 1 lakh as the value, mistake I have made. So 50,000 extra I have to put. No problem, you put a debit note. So for increase in value, debit note. For decrease in value, credit note you can put. So these are the other documents. So all the documents over we have given. So as I said, this particular invoicing provisions also require some 3 to 6 hours time of discussion. So I've given the overview, more in depth. You can just try to. This is, I think, enough. Broad overview I've got. For now, it's enough. So more you can just go through at your end. You can also reach out to me. So any doubts are there? I already shared my number. If you still have any other doubts, do reach out to me at my number. I'll just write it down if you have not got it earlier.
So students, any clarifications, any doubts, you can unmute yourself and then speak.
I already asked them a couple of times. It seemed to be very clear.
Okay. So I think, maybe they require some time to
I understand very much.
Understand the topic, because it is a very new topic to them, and it is very comprehensive and a very exhaustive one. So it takes time for them to analyze and then get back. Thank you so much, sir, on behalf of the department and the institute. I thank for your valuable time, because you have been in the mid of various meetings and you are in the peak period, September and October. In spite of that, you have joined us for enriching our students. Thank you so much, sir. Thank you for the patience, dear students. We'll meet tomorrow again. Thank you.